Hello everyone, welcome back to my channel. The Vietnamese dong has recently hit a historic low against the US dollar, reflecting broader economic pressures in emerging markets driven by the strengthening dollar. This shift is significant, as it could signal further currency weakness in Vietnam and potentially impact various sectors of the economy. To understand the causes, implications, and what might come next, let's dive into what this development means for Vietnam and why it's capturing attention in global financial circles. On Thursday, the State Bank of Vietnam set its currency reference rate, or fixing rate, for the dong at 24,283 per dollar. This marked the weakest point for the dong since at least 2005, according to data from Bloomberg. The fixing rate essentially acts as an official benchmark, around which the currency is allowed to trade within a certain band. While this set rate reflects a significant dip, the dong itself traded close to 25,402 per dollar on the same day, coming dangerously close to another record low. The strengthening US dollar is a major factor here, and it has put considerable pressure on emerging market currencies like the Vietnamese dong. Over the past year, the dollar has surged, largely due to higher interest rates set by the U.S. Federal Reserve to combat inflation in the United States. When the dollar strengthens, it makes other currencies relatively weaker. For countries like Vietnam that rely on exports, a weaker local currency can be a double-edged sword. On one hand, it could make Vietnamese goods cheaper and more competitive on the global market. However, it also raises the cost of imported goods and debt payments for the country, putting a strain on businesses and consumers. For Vietnam, whose economy is highly export-driven, the weaker dong may seem beneficial at first glance. Vietnamese exports, ranging from textiles to electronics, are now more attractively priced in international markets. Yet, there's also a downside. Vietnam imports a significant portion of its raw materials and essential goods. With a weaker dong, these imports become more expensive, which could lead to inflation within the country. In simple terms, if the currency continues to lose value, consumers could see rising prices on everyday goods, which would impact their purchasing power. Moreover, Vietnam's economic outlook could be impacted if the currency remains under pressure. A weaker dong makes it harder for Vietnamese businesses with US dollar-denominated debt to service their obligations, as they need to exchange more dong for dollars. This could lead to increased costs for businesses, affecting profitability and potentially causing ripple effects across the economy. Additionally, foreign investors may become more hesitant to invest in a country with a rapidly depreciating currency, as it could erode the value of their returns when converted back to dollars. The State Bank of Vietnam has a challenging task ahead as it tries to balance currency stability with the economic needs of the country. The central bank could intervene to prevent further depreciation by selling off its US dollar reserves, but this is often a temporary measure and might not be sustainable long-term. Raising interest rates could also be an option, but that might slow down economic growth, as borrowing would become more expensive for businesses and consumers. In conclusion, the dong's recent drop to a record low is a sign of the pressures emerging markets face amid a strong dollar environment. While there may be short-term benefits for exporters, Vietnam must navigate this situation carefully to avoid adverse economic consequences, especially for consumers and businesses relying on imports. This development serves as a reminder of how interconnected global financial markets are, and how changes in one part of the world can have ripple effects across borders. As the situation evolves, the decisions made by Vietnam's central bank will be closely watched, as they will determine the future path of the dong and its impact on the Vietnamese economy.